Hello, welcome back to our channel, traders. Today we are diving into an exciting and powerful trading strategy. This strategy is very simple, and the thing is we're going to use just one chart to do this strategy, and which is the 5-minute chart. And I think if you use one chart, right, the benefits of using one chart is you only focus on that one chart and you don't have to switch over to any other chart. Now, it is simple but yet powerful, and you can make some serious bang every day using this strategy on the 5-minute chart. All right, let's quickly get to it, and so we can go to that strategy really quick. It's gonna be a quick and short and sweet and very simple and powerful strategy that you can use. Again, thanks for stopping by. Let's get to it. This is if you didn't know already, because I have many other videos on my channel about FVG. So this is an FVG, a fair value gap. It is also called an imbalance. What is an FVG or imbalance? It is practically a set of three candles formation where the wicks from the first candle doesn't connect with the wick from the third candle. So the space between the two is the FVG. That is the imbalance that happened. And an imbalance is when there's more sellers present than buyers, or more buyers present than sellers. So therefore they create an imbalance where there's more orders on one side than the other. So therefore there's a blank or empty space there. These empty space or blank, they usually work really well for certain strategy. So for a bear strategy, a bear FVG, you can see it right here. This is 3 red candle. Even though you see it black, it's represent red candle. So for bullish strategy, you will see 3 green candle, and then the space between the 2 wicks, since they didn't meet, is the fair value gap or imbalance. Let's get to the chart. So there's not much to cover here, right? So all right, so let's get to it. All right, the strategies consists of one, we are using FVG. I already mentioned that. The second criteria is that you need the FVG to be close to a support area on the 5-minute chart. So remember, we are using a 5-minute chart right here. So we need that FVG to be somewhere close to an area of support. An area of support doesn't have to be this huge balance area here. It could be as simple as this area here count as an area of support. It could be this little top right there would count as an area of support. It's somewhere where price can come and bounce from, and there happen to be an FVG close by, to the close proximity of that same search area, right? So let's look at some stuff on the chart really quick before we get to an example. If you look here, right, you see a lot of chop on that day, chop, 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 right? What do you see right here? Right there, there is an FVG. What price did? Let's show you that there is really an FVG right there. See? There is an FVG there. You see that massive candle. This is the first. This is one candle right there. That red candle. This is a green candle, and this is another red candle. But between the two red candle that's there, you can see that the wick, that's the little line in the candle, they did not meet in any form whatsoever. So therefore the space in between is an FVG. What happened after that created? Price come back and dip into the FVG and then stays above it. It doesn't keep moving down and then move up. As a scalper, right? So in the 5-minute, catching move like that is great for scalper, man. Most scalper is looking for about 5 to 10 points, 20 points sometime, right? You will get that by playing the FVG on the 5-minute. Now, you don't just jump in as soon as the candle poke into the FVG. You're going to wait. for candle to come back and show that it want to move back up. Like in this example here, the price come back into the FVG and then point that nice little green candle there. After it pointed, it come back and retest again that same FVG and couldn't go down below it. Now in this occasion, there happened to be VWAP in the same location. Hey, the more confluences you have, the better. And plus, this area is an area of support. Yeah, so therefore, I would go ahead and catch a trade right up here and then ride it to this area. At least take my first few contract right here, since there's some resistance right there, and then leave it run it to see if we can catch some more of that move. That is the strategy. It's as simple as this. You look for an FVG in the 5 minute close to an area of support, and if there are other confluences in the same area, better yet. And you wait for price to come back to it, and then you're going to look to catch a trade after it breaks certain area, right? Or if you are a risky guy, you could go ahead as soon as it poke into it and take the trade and put your stop all the way back here. But I don't do that. I prefer to let price come and show me that it wants to bounce off the FVG. All right. So, all right, this is one example on the chart. Let me show you another one. Right there. This is all choppy. Right. Let's keep moving. Let's look at a different day. You'll see what I'm talking about here. Look. This day the market was going down, and what happened? There's an FVG right here that is created right around the resistance area. You see, this area was previously resistance, right? And what happened? There's a little imbalance, a little balance area here. There's an FVG that is created here. What happened? Price come back to it and get pushed down. Every time it comes back to it, get pushed down, right? So, hey, you could have catch the trade here because there are resistance right where the FVG exists. So you wait for price to poke the FVG and come back down. When it's about to break below that candle right there, then you could catch a trade and catch a nice scalp for at least 15 to 30 points, right? So that is as simple as this. So let's get to one example really quick, and then I could go all day, show you that happen every day on the 5 minute chart. When price come back to an FVG, if you're following the right trend, you will catch a scalp. Remember what I just said, if you're following the right trend, right? Because at this point we were trying to catch a move down, because price poke all the way up there and come back there and could not stay up here. So therefore the momentum shift changes, so we can catch a scalp. All right, if I go to a different day, you'll see the same thing is happening, that an FVG was created in an area of support. This is an area of support previously. Price broke below it and then come back above and create an FVG right here, right? And what happened after that? Price come back and stay right up. Let me just draw it for you so you can see what I mean, right? So you can see it. So it's not just that I'm saying there's an FVG there. So I'll draw it so you can see it right there. Look, right here. There's an FVG. Price come back to it and stay on it, and boom. What happened? Massive candle and then take off. Now, if you wanted to take the trade, right, once it comes here and it stays here, after this green candle pop, right, you could have take a trade there and then put your stop right below this little area right there. Put your stop there, and if price come back to it, you were wrong. And you stay in the trade, you'll see what happened. And you wouldn't even wait for all that time, right? Because we are scalpers, so we're trying to scalp price. Now, these strategies are not only for features, they also work on any stocks, as long as there's enough momentum. Well-known stocks that have volume on them, right? Like Tesla, Apple, Facebook, Google, and some of the other ones out there. You can use that same strategy to make money on them. All right, let's get to the example, and then we are calling it after that. All right. Okay, for the example, what we're gonna do is let me make sure I have. Okay, all right. For the example, right, we're going right in and take the trade right there on the 5-minute, because I said we can use just the 5-minute charts to take the trade. So therefore, that is exactly what we're going to do. We're going to use the 5-minute charts to take the trade. So we're gonna go and use this here. Okay, all right. Hey, morning. All right, so what I'm gonna do is prep my order, right? I want to buy a little more than that, so I'm going to switch to show my chart trader here and increase this. Actually, let's just switch to what I usually use, the 3 thingy here. So, and then we're going to take the trade, right? So I'm going to, right there's an FVG. First, we're going to mark the FVG where there's a little support area here. Price come back here. FVG was created right there. So we're gonna draw the FVG right here. FVG is drawn. You see price come back to it and bounce. You could have make something there on a quick scalp, because I told you on the 5-minute, if price come back to an FVG that is close to a support area, yeah, I'll say a good 80% of the time that you can catch a scalp on this area. All right, so now we're going to catch a trade here and show you this thing in action. So gonna buy some stop right above there, and once price break above there once again, we'll catch a trade, and then we'll put our stop somewhere below here, right? All right, so let's get to it. Okay, so price is fluctuating around. We're waiting for our order to be taken. So as price coming up, we're waiting here where we are. We're gonna try to catch that trade right around 80 area actually. Well, if we could catch it at 80, that okay. So remember, this is a 5-minute chart. I'm bringing my stop right here, so you can see it's almost, I have 3 contracts, and where I place my order right there, hopefully I don't get stop out, right? Because when I'm taking this example, I'm practically doing it. Truthfully, you can put your stop right below the FVG in most time, but if you don't want to, put too much risk on, you could just use this candle that's there and put your stop right below it. Now, me personally, I would most time, depending on the momentum for the day, put my stop right below that green candle right there. Because reason why I can do that, this little area here will act as support right in the middle of the FVG. So I'm going to speed up the action so we can get our first target in. My start move, okay, you can see what happened after that. So now we got in, and the first 2 contract is being taken out, and you see that price is moving. This is our runner. So what did we get on the first 2 contract? The first 2 contract was a good from 85, let's say it's from 85 to 100. 85 to 100, that is a nice 15-point move in our favor. So that was it. So it's a scalp, a 15-point scalp with 2 contracts. That's pretty good money. I'll show you in a minute. All right, so let's just go ahead and get this trade out of the way. Let's speed up a little. Let's see how far would our runner go before price just come back and hit our stop if we don't trail it. All right, I'm going pretty fast here. All right, let's see. See, with the runner only, you see I could still make another $700 to $800 look what happened after price come to the FVG and then show some momentum and move. Look what happened. You see, I am going to close that trade because we make too much already. All right, so that is it, gentlemen. Please don't forget to hit the like and subscribe, as I'm trying to build a nice community here. So yes, please hit the subscribe button and hit the like. And yeah, as I said, one chart, one strategy, simple strategy, and you will find, I guarantee you will find one setup every single day, at least 1 to 5 setup, I would say, every single day on this strategy. So yes, hit the like and subscribe, and thanks for stopping by. Really appreciate you being here. And don't forget, risk management is important, and you can see that I did use a stop to protect myself in that simple and powerful FVG 5-minute FVG strategy using one chart only. Take care.